Stocks on Wall Street and Friday's trading session sharply lower on the back of a weaker than expected jobs data report and Trump's revised tariff rates taking effect. The Dow tumbled more than 540 points, while the Nasdaq slipped over 470 points. Stocks in the Asian Pacific opened mixed as investors assess latest round of tariffs and a weak jobs report from the United States. The GIFT Nifty is indicating a positive start for our own Indian markets. Crude oil prices slip after OPEC Plus agrees to another large production hike in September. Brent trades at $69 a barrel, while gold prices rise as weaker than expected US payrolls data boosts rate cut expectations. And in key earnings, FMCG major ITC reports a mixed set of numbers. Revenue beats estimates led by cigarettes and agri trading, but margin sees sharp contraction owing to leaf tobacco inflation and weakness in the paper business EBIT. The two-day RBI monetary policy meeting begins today. The Reserve Bank's interest rate decision will be announced on Wednesday. The committee is largely expected to hold rates this time around. Good morning in the Mumbai News Center. I am Vamakshi Doria and you're watching Power Breakfast. It's the first day of a fresh new week. Of course, we have a slew of earnings lined up this week, but more importantly, we also have the RBI's interest rate decision as well as the August 7th tariff deadline, which is when all of the tariffs will come into effect. So an action-packed week for sure. But first up, let's take a look at how the Asian markets are doing this morning. Well, it's looking like a mixed screen for now. What's not doing too well is the Nikkei. That index is down almost 2%. Taiwan as well is down and out almost. We are seeing a very sharp cut here of almost 1%. Hang Seng, on the other hand, doing relatively better as compared to the other indexes. But on the flip side, when you look at Kospi, which is the Korean index, that is doing quite well. It's up almost 1%. So largely, the trading screen across Asia is looking quite mixed. But let's take a look at what the GIFT Nifty is suggesting for our own Indian market. Remember, last week was absolutely dismal. In fact, it marked the 5th consecutive week of decline, which is the longest losing streak in the last 2 years. And today, we're actually hoping for no Monday morning blues because the GIFT Nifty is implying an open, an uptick of almost 62 points. Let's look at how all the overnight cues that we had over the weekend will impact our own Indian markets. We now have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, we have Vivek joining us to get us all the market cues we need to watch out for today. Good morning, Vivek.
Well, good morning. Like you mentioned, especially when you're looking at the week gone by, all across equity markets worldwide, you did see quite a bit of a risk-off sentiment prevail. So when you actually saw the US markets, all of the US markets actually ended lower by over 2% in the week gone by, especially when you look at Nasdaq on Friday, over a 2% decline intraday as far as Nasdaq was concerned. Now, talking about oil prices, oil prices again did see quite a bit of a sell-off just on the back of the fact that there is a higher than expected planned OPEC Plus production cut. Back of that, oil prices now hovering around the $69.2 a barrel mark. Indian markets, like you mentioned, 5th straight week of decline is what we saw in the week gone by, and all of especially the Nifty ended lower by over 1%. The Nifty Bank and Mid Cap Index ended lower by over 2% each in the week gone by. Except FMCG, all of the sectoral indices, especially realty, defense and metals, were among the top losing index, and the Nifty ended below the 24,600 levels. Now, when you're talking about the pharma pack, especially on Friday, you did see significant selling pressure on the back of worries as far as the most favored nation pricing was concerned. The entire pharma pack did see selling pressure. PNB Housing Finance clearly stood out on the back of the fact that the sudden CEO resignation was something that the street didn't like. Now, talking about the cues to watch out for today, earnings season continues, and along with that, have a look at Asian markets and the GIFT Nifty, all indicating a flat to muted start for our own markets today.
Well, thanks so much for that, Vivek. We'll be watching out for that. But over to Ria, who will now list out all the stocks to watch out for and trade today. Ria?
Well, yes, let's take a look at the stocks to watch out for today. First up, we have Federal Bank on the back of its Q1 numbers. The net profit has come in at 862 odd crores versus estimates of 933 crores. And the decline in net profit was largely led by higher provisions in this quarter. Net interest income has also come in at about rupees 2,337 crores versus polls of 2,323 crores in this quarter. For ABB India, the margins have been weak at 13% versus 19.2% in the same quarter last year. Order inflow has also also declined by 12% on a year-on-year basis, coming in at 3,036 crores in this quarter. For ITC, net profit has come in at 4,112 crores, slightly below estimates. Revenue, although, has been above estimates, coming in at 9,749 crores. For Tata Power, in quarter one, net profit has seen an increase of around 6.5%, and even the revenue has gone up by 4.6% compared on a year-on-year basis. For Honeywell Auto, the net profit has gone down by 8.7% on a year-on-year basis, although the revenue has jumped up by around 23.2%. For MCX, the net profit has seen an increase of almost 50% on a sequential basis, and the revenue has also gone up by 28.2% for this one, and the board has also approved a share split in the ratio of 1:5. For LIC Housing Finance, net profit has gone up by around 4.5% on a year-on-year basis. Net interest income has also gone up by around 3.9%. Moving on to Hero MotoCorp, this one will be in focus on the back of the July auto sales. Total sales have gone up by 21% compared on a year-on-year basis. Karnataka Bank to also be in focus. The CFO, Ramaswamy Subramaniam, has resigned with effect from the 1st of August of this year. For PNB Housing Finance, the function heads Jatul Anand and Vali Sekar have been appointed as the Executive Director and the Chief Business Officer respectively from August 2nd, 2025. And Dilip Bilkon is the last one that we'll be keeping an eye out on. The JV has emerged as the L1 bidder for the Gurugram Metro Rail project with a total value of rupees 1,504 crores for this.
Well, thank you so much for that, Ria. Lots of stocks to watch out for. And finally, we have Sudarshan joining in with cues from the F&O space. Sudarshan, what are we watching out for?
Good morning, Vamakshi. So market will look to have a positive start after the last week that we saw that market extending losing streak to 5 weeks, the biggest losing streak, longest losing streak that we saw in last 2 years. So on the Friday, we saw a big fall in both Nifty and Sensex. Even Nifty Bank was down almost 500 points. Now, what does GIFT Nifty indicate for today? It's indicating a start in the green, but the big question would be, will we be able to sustain the opening uptake? As far as flows are concerned, FIs remain on the sell side. Even on Friday, we saw FI selling more than rupees 3,300 crore. But again, like we have been seeing in the past, it's been fully offset by DIs, which have bought more than rupees 3,100 crore. In the index derivatives too, we have seen FIs selling more than rupees 3,800 crore, and they have added short positions of more than 20,000 contracts, and now FIs long exposure has reduced to 9%. On the option front, on the call side, 24,800 and 24,700 calls have seen healthy additions, while on the put side, 24,200 put was the most active one. So support for Nifty is now around 24,400 and resistance has moved lower to 24,100. One stock that has entered the band is PNB Housing after a big fall that we saw on Friday.
Well, thank you so much for that, Sudarshan. We'll be keeping an eye out on all of those important levels, but let's slip into a very short break. Up next, we get you all the cues from the Wall Street and the jobs data that came in on Friday. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV 18. In the US markets, Wall Street tumbled on Friday as weak jobs data and Trump's modified tariff rates sparked a sell-off. Dow fell 542 points. The S&P 500 dropped by 101 points, while the Nasdaq was down almost 472 points. We now have CNBC's Mackenzie Sigalos gets us a wrap of all the action on Wall Street.
Markets tumbled on Friday as weak jobs data and President Trump's modified tariff rates sparked a sell-off. The Dow fell 542 points. The S&P 500 dropped by 101, its worst performance since May. And the tech-heavy Nasdaq was down 472 points. Now, President Trump ordered the firing of the Commissioner of Labor Statistics on Friday, following the release of Friday's weak jobs report. Now, the data showed the U.S. added just 73,000 jobs last month, coming in lower than the estimate of 100,000. The unemployment rate also ticked higher to 4.2%. Erica McIntyre is a Biden appointee who has served in the role since 2023. Trump said she, quote, will be replaced by someone much more competent and qualified. And a Florida jury found Tesla's self-driving software was partly to blame for a 2019 crash that killed a young woman and severely injured her boyfriend. The panel determined the electric vehicle maker should pay $329 million in damages to the victims. The jury found the driver bore the responsibility for the rest of the crash. The man said he was using Tesla's autopilot software when he bent over to look for his dropped phone, and his Model S then blew through an intersection and crashed into a parked SUV. Tesla says it will appeal the verdict, which comes just weeks after the company rolls out its self-driving technology in Austin, Texas. That's what's happening here in the U.S. Back to you in Mumbai.
Well, thank you so much for that update, Mackenzie. In fact, US President Donald Trump said he would announce a new head of the Bureau of Labor Statistics within 3 or 4 days. He fired BLS Commissioner Erica McTarrifer after accusing her of faking jobs numbers without providing any evidence of data manipulation. Let's listen in.
We'll be announcing a new statistician sometime over the next 3 or 4 days. We had no confidence. I mean, the numbers were ridiculous, what she announced, but that was just one negative number. All of the numbers seem to be great, and so we'll see how that comes out. And if you remember, just before the election, this woman came out with these phenomenal numbers on Biden's economy. Phenomenal numbers. And then right after the election, they announced that those numbers were wrong. And that's what they did the other day. So it's a scam, in my opinion. My opinion is it's just additional scam.
Well, let's also see what experts had to say about the jobs report.
I think it makes it even more likely that they're going to cut in September. We have had a series of 25 basis point cuts in September, October, December, and to me that seems, very likely, and it could be more. I mean, it's certainly a reasonable idea that we're in restrictive territory, but these sort of data suggest maybe we should get back to neutral a little bit more quickly. We have that happening over a longer period of time, but you could accelerate the process.
My reaction is that this creates increased complexity for the Fed, not simplifying the decision. What we didn't focus on is average hourly earnings going up from 3.7 to 3.9. It's a backdrop in which there are a number of analyses that suggest inflationary pressures are more likely to increase than decrease. And the other point to make is the unemployment rate, which is the one that Chair Powell focused on most recently, stayed roughly steady at 4.2. So increased weakness, the revisions are not helpful, but as he will tell you, as he did tell you, there's a lot of data left to come. So I think the market's pricing in a big move towards September.
Well, and let's get you the final update in our global market wrap this morning. Markets in Europe suffer their worst session since April as US President Donald Trump rejects tariff rates. The French CAC slipped by 225 basis points, while the German DAX lost nearly 640 points. The British FTSE as well shed 64 points. The Pan-European index, which is the Stock 600, provisionally closed 1.8% lower on Friday. But on that note, let's slip into a very short break. Up next, we get you cues from the commodities market, so stay tuned. Welcome back. Thanks for staying tuned in to Power Breakfast on CNBC TV 18. Now, following the comments by Donald Trump last week on India's rising crude imports from Russia, sources tell us now that India's imports of crude oil from the US are also to rise. Parikshit, what are you picking up?
Well, yes, we believe that India's energy imports from the US have gone up significantly after Donald Trump won the election. But more than that, throughout the course of FY26, we are going to see a significant increase. In fact, we're told by sources that Indian energy companies are likely to increase their crude oil imports from US by 150% year on year in FY26. The crude oil imports have already gone up in quarter one of this fiscal by 114%. India has imported $3.7 billion worth of crude oil from US in quarter one of this fiscal compared to $1.7 billion worth of crude in quarter one of FY25. The share of US crude in India's overall import basket has also increased from 3% to 8% in July this year. So there is a significant increase. This is going to grow further. And we're also learning that it's not just crude oil, even LNG imports from US have been doubling up from $1.4 billion in FY24 to $2.4 billion in FY25. We are going to see more long-term contracts, and let's see how this partnership goes. So India clearly is going to buy more from the US, but as far as purchases from Russia are concerned, they're not going to stop. This is what top sources in the government are telling us.
Well, thank you so much for that update, Parikshit. But we also understand from sources that crude oil prices could harden if India stops buying from Russia. Let's go across to Sapna Das, who is joining us with more details on this. Sapna?
Morning, that's right. What we are going to understand is that, oil prices could harden significantly if, India halts its imports from Russia. It's also, the fact remains that India buying Russian oil is also critical to maintaining price stability. As we are aware that China and India are the top buyers of Russian crude. So basically close to 2 million barrels per day of these 4.5 million barrels per day that Russia exports. 2 billion barrels per day comes to India. So that's like over 44% of what Russia exports. So, we can understand how critical it is, the kind of imports that India has from Russia. 2 million barrels per day of oil supply is not a small amount. So basically, also the fact that Russia produces 9.5 million barrels per day, or nearly 10% of the global oil demand. So, the fear here is that if the Russian oil goes off the market, this could, have a major impact on crude oil prices. So, giving the example of Brent spiking to $1.30 in March 22, when the Russian sanctions had come in post the Ukraine war. So that is one example. So had India not purchased Russian crude in vast quantities and had not stepped up its buying of Russian oil, there was oil prices could have gone actually even beyond 137. So the same argument is being given at the moment. The same claim is being made that if we don't continue buying the way we have been buying from Russia, this could really harden crude oil prices. This is something that we have to see how it pans out.
Sure. Thanks for that, Sapna. But do stay on with us because the government is looking to invite financial bids for IDBI Bank, a strategic divestment between October to December this year. And they are hopeful of selecting winning bids by March FY26, says Deepam Seki, Arunish Chawla. And Sapna, tell us more on this development as well.
Absolutely. So, it's been like almost 3 years since the IDBI primary information memorandum has come out and the initial bids have been called. So, given to understand that India will be calling the financial bids for the bank disinvestment by the third quarter, which essentially means by December. It could also be possible that the bids are actually called for by around October, earlier than December. This could also be a possibility so that by December, Jan, there is some clarity in terms of the financial bids coming in. And as government is clearly indicating, Secretary is on record saying that by March FY26, the actual successful bidder for IDBI bank transaction is likely to be in place. So this is exactly what is expected. They have also indicated that all the due diligence that was ongoing for IDBI bank that has been completed. That means basically all your SPAs, everything has been signed. All of that is under the belt. That's one aspect. Second, also in terms of your your other OFSs like LIC and your public financial institutions, government has said very clearly that they'll be doing some kind of stake dilution. So in terms of that, the merchant bankers and legal advisors are in place. However, what Secretary is indicating very clearly is that they're going to be there for the next 3 odd years, which means the government is not giving it as to when the transaction will happen.
Sure.
Particularly LIC, a lot of people have been asking. So starting from now,
Sure.
for the next 3 years, anytime.
All right. Thank you so much for that, Sapna. But we now have Manisha Gupta joining us with all of the updates from the world of commodities. Manisha, what are you watching out for today?
Well, Mama, thank you for that. I'll start with the crude oil prices because we've seen a third straight day of decline come in for this one, even as the U.S. is pushing for or threatening 100% secondary sanction on Russian crude buyers. OPEC clearly sees an opportunity within this because OPEC Plus is increasing its market share in the global markets. They're looking to increase production by 547,000 barrels per day in the month of September. This is after increasing 548,000 barrels per day in the month of August as well. So clearly, OPEC looking at increasing production, increasing supplies as well. And the prices in crude also seem to be holding around that 69.70 mark. What we also have seen is some gain come back in gold and silver prices after the U.S. job report shows a not very effective or a strong number. There is a 75 probability of now a September rate hike, and that is what the market seem to be weaving in. The only one thing that I don't see doing quite well in the commodities is the copper prices. We've seen 24% of decline in the previous week, and we've started nearly a percentage point lower today as well. So base metal prices continue to be under pressure. Other commodities seem to be doing well.
Well, thank you so much for that comprehensive roundup, Manisha. But moving on, the Enforcement Directorate has arrested Viresh Joshi, former chief trader and fund manager of Axis Mutual Fund, in connection with a 200 rupees crore front-running scam. He was taken into custody on Saturday and has been remanded to ED custody till August 8th by a special court under the Prevention of Money Laundering Act. But with that, it's a wrap on this edition of Power Breakfast. We're leaving you with the GIFT Nifty indicating a positive start for our own Indian markets. Don't go anywhere. Pasar Morning Call comes up next.